Okay, well, I think we'll go ahead and get started. Hopefully, the others will join us, but as a courtesy to those who are here this evening, we want to make sure that we have enough time for your questions and so that Adam can get through everything. Well, first of all, let me say who I am. I am Vince Jackson, Executive Director of the Greater Northampton Chamber of Commerce. And I know a lot of you are not strangers to the Chamber, so let me first say Happy New Year and welcome to our first Zoom video conference of the year. And we're kicking it off with information that we think will be extremely helpful to our small business community. And we're so pleased that Adam Duso is joining us again. He's no stranger to the Chamber. He's been here before. In fact, two of our greatest events last year that was held via Zoom, Adam was the headliner. So we thank you, Adam, for being on tour and coming back again to share your expertise with us. Thank you so much. Now, his organization is appropriately named Second Wind Consultants. I think that's a really creative and clever name because they give businesses that second chance that they need. So if organizations are in distress, Second Wind helps them to retain their value, avoid insolvency and bankruptcy. And you got to admire an organization like that that loves solving the toughest problems for businesses. So their whole goal is to make sure that you find ways to stay in business. And they look at a number of ways to help you do that, whether it be helping you to eliminate or defer non-essential expenses, or reorganize your business in an appropriate way, or to work with you to help settle any debts that you may have. Again, they want to keep you in business and help you retain the underlying value of your organization. And that is so commendable. And so Adam is one of the founders. He's now Chief Business Officer. Did the company start 11 years ago, Adam? I think if I saw that right.
2008, yeah, so 2008.
2008, yes. So they've been around a while. And Adam's specialty is in SBA transactions, debt settlement, workouts, or as I said before, business reorganizations. And because they are so committed to their business purpose and mission, they are offering 15 hours of complimentary business consulting services to you tonight. So be sure that you listen and take notes and take advantage. And then not only that, follow up with Second Wind Consultants and see how they may be able to assist you where needed. So with that, Adam, I'm going to turn it over to you, and then we'll proceed with the program.
Thank you, Vince. That was a really great introduction. I'm glad that we got that on record there. I'll play that for my wife later. All right, jumping into it. There's a lot to cover here. I do want to say as a preface, I did do 2 of these, what seemed like a lifetime ago now. And this is the 3rd of that series. So there is, most of this content does assume that you guys have a general understanding of what PPP and EIDL is as a general program. And this is really to explore what is different this round and how that may apply to your business. We do have time allotted at the end for general questions that and we can cover some of that material at that point in time if necessary. But I just want to say that as kind of an opening disclaimer. So as an outline of what we're going to discuss, we're going to talk about PPP, starting with eligibility, what's changed and what hasn't. We will then move on to EIDL, its eligibility, what has changed and what hasn't. We'll talk briefly about, there's a lot of rumors going around as to what more relief may be coming in the future for small business. And so we'll have some discussions, while not firm facts on that, we'll be able to have some discussion on that. go over a few frequently asked questions, and then at the end have that open discussion where we can discuss anything you guys would like. So first of all, PPP, eligibility and differences from round one. So PPP is it's funded to the tune of $280 billion, I believe. And there are some major differences this round. One that is probably going to affect several of you on this call is if you have the right NAICS code, meaning that you are in accommodations or food service industry, you actually qualify for a higher loan amount this round than you did last round. So every once in a while, lobbying shows up for the good, and whatever lobby figured this out, we're the only successful one in the country. So that specific NAICS code gets a higher approval rating and allows you to have 3.5 times monthly payroll for businesses, and everyone else gets 2.5 times, which is exactly what it was in the last round. So for many businesses that don't fall into that group, the loan amount and the approval amount from this round, it's an identical approval process for most businesses. If you fall into, if you're a downtown restaurant or things of that, or bar, or things of that nature, you will get approved for a higher amount this time than you did last time. The next thing that has changed is the maximum amount. So it is now $2 million. I believe it was $5 million before. So the eligibility, the max eligibility for any business has been capped at $2 million. One of the biggest changes here is there is a distress qualification, and it's a revenue loss threshold is what they call it. Businesses must demonstrate a 25% revenue loss in gross receipts for any calendar quarter of 2020 when compared to the same quarter in 2019. This threshold was originally proposed at 50%. So now it went from 50% to only 25%. Gross receipts are, for those that this is relevant to, for most people, it's considered net sales. So if you have any returns or things of that nature, those offset your sale amount. Something we can discuss later if you have side questions. But the actual litmus test here is if in any quarter you've shown a reduction of 25% in revenue over that same quarter the previous year, you will qualify. And if you cannot prove that amount, then you don't qualify at all. It's not like a sliding scale. You either pass this qualification or you do not. We'll talk about this a little bit later, but that is largely being done through very quick bank statement referral. So not all businesses have filed their taxes for 2020. In fact, most of them have not. Many of them don't have audited or reconciled financials. So a lot of this is being driven off of bank statements, and you are signing an affidavit stating that this is true. So it is worthy when taking money or a grant from the federal government that you do whatever is necessary to verify that you actually fall within this component, and don't just leave it to your bank to qualify for you because they have your bank statements. I don't know that the SBA will have the resources to go back and audit all of these people, but if they do, you want to be on the right side of this qualification. I'm sorry. Number of employees has been changed to 300 or fewer employees. I think for most of us that still qualifies. This number was originally 500. So I'm sure a lot of you read articles that about half of the PPP funds went to businesses that it wasn't originally intended to because they were part of a larger company. So this was one of the things done to try to prohibit that from happening again in this round. as was the eligibility size per location. So if you have 300 or fewer employees, it is collective across your multiple locations. So just because you have, if you have 10 restaurants with 30 employees each, you have 300 employees. You don't have 10 restaurants with 30 employees. Now, that is actually a bad example because, again, the restaurant industry and the lodging industry got a carve out here, and they are the only ones that are exempt from that. So they are looked at a location by location basis. But if you had a multi-location trucking business, you are looking at your total employees across all of your locations. So with the exception of that same NAICS code, this you are held to a cumulative amount of employees. And again, this is to try to stop these funds from flowing to larger businesses when they are intended for smaller businesses. The eligibility waiver of affiliation restrictions. This, again, there was a carve out for this. This is the same thing, trying to stop money from flowing to large businesses. So if you're part of an organization as by way of license agreement or otherwise, you're not going to qualify for this because you're actually part of a larger conglomerate. Again, restaurants and lodging facilities under that same NAICS code are not subject to the SBA affiliation rules. So franchise, for example, if you're part of a franchise chain, you are still looked at as an independent operator and not part of the franchise conglomerate. Only true for those industries, not true for every other industry. Forgiveness. The provision is, there hasn't been much changed in the loan forgiveness provision. The process of loan forgiveness has changed, but the forgiveness process is still there. The loan can be fully forgivable as long as it's spent on eligible expenses, which are split 60% on payroll expenses and 40% on non-payrolled qualified expenses during this specific time frame. As was with the amended version of the PPP, you can choose your structure. So meaning the funds would be spent within either an 8-week or a 24-week period from the date of the loan origination. 60% of the expenses must be spent on payroll and 40% on forgivable expenses in order to maximize forgiveness. Anything not spent on those qualified expenses converts into a loan under the same terms and conditions as the first round of PPP. So not much has changed on the forgiveness platform. There are new forgivable non-payroll expenses. So things such as PPE, cleaning products and services that weren't in the normal cost structure of the business, money being spent on your space to allow for social distancing. Such, like whether that's just symbols or you have to rework the layout of your store, those expenses are now forgivable expenses under the PPP as long as they're done to meet social distancing standards. So basically, the effects of the pandemic, the actual tangible costs that you need to just keep your businesses operating, masks, hand sanitizer, social distancing stickers, costs of plastic screens, and all of that are now deductible expenses under this new round of PPP. Seems like we should have got there in the first round, but here we are, second round, we got there. Tax treatment. So for round 1 and 2 of PPP loans, business using PPP funds for allowable business expenses can deduct these expenditures from their taxes. That is something that we could go into a tangent on for an hour in and of itself. Quite frankly, if you have questions about PPP taxation, you should talk to a CPA. I'm not a CPA. I know a bunch of great CPAs, but someone should look at your situation and tell you exactly how this is going to affect your taxable income for the coming year. Just know on a conceptual level that although you are getting these funds in a grant, using those funds for expenses doesn't necessarily mean that you then can't write those expenses off on your tax return. But then talk to a CPA. Streamlined forgiveness. Like I said before, for borrower, the process has been streamlined. We're still getting more and more updates on this. I can't answer all of the questions that are likely to come out of this section, but what we do know is for borrowers of $150,000 or less, which is less than the median PPP loan. So for the majority of us, there will be a simplified 2-page process to streamline loan forgiveness. That 2-page thing for most banks will be done in a portal online and will not be 2 paper pages, but really something that you fill out digitally and sign digitally. We don't have, I've seen drafts of what that will look like. I know some banks have at least a version of it. My guess is this is still subject to editing, but the intent is there's going to be, for those of you that went through the first round of forgiveness, it was still relatively simple, but it required a lot more. You probably put every possible attachment you could have thought of up there. There's not going to be as much back-end verification on this. This is largely going to be a self-audit of how you expended these things. But while that is streamlined, the information you enter into that form should be accurate down to the dollar, because you are signing it under the penalties of perjury. So make sure that this information is accurate, because you are asking the government to forgive a $150,000 loan based largely on your word. And so whatever you represent in that form needs to be as close to accurate as you can possibly make it. So while the bank is not going to be doing as much process in auditing every expense that you've made, it doesn't mean that you are not issuing these things as fact to the federal government in order to induce them to forgive you of a loan that you've taken. So take that seriously and make sure that the information that you are putting in there is accurate. Basically, do the work even though the bank's not doing it. One of the, moving on to a lighter topic, one of the the better changes is that the EIDL advance deduction from PPP forgiven amount. This was repealed. So if many of you found out that if you got an EIDL advance, which was the EIDL portion of a grant, that when you went for loan forgiveness, the first $10,000 of your PP, up to $10,000, depending on how much you got in your grant from the EIDL, was not forgiven in your PPP loan. So you could have gotten the rest forgiven, but you were stuck with paying back the amount that was equal to the amount that you took from the EIDL advance program. That provision has been removed. So there is, and we'll talk about it in a minute, a targeted second round of EIDL advances. So if you get an EIDL advance again, and you get a second PPP loan, there will not be that overlap. You will be able to get 100% of your PPP forgiven and not have to pay back the EIDL loan. which is what we were led to believe was going to happen in the first round and did not. And then it was repealed in the second round, and will allow those that qualify to receive both grants. For those businesses that own the commercial property in which they operate, so you're your own landlord, there still has not been any change as to, that's considered related party rent. So if you are paying yourself rent because you own the building in which your business operates, that rent was not forgivable under the PPP loan. It was discussed in this second round, but this issue was not addressed. Now, many anticipate, and we'll talk about this in a minute, but many will anticipate that Biden is going to push for a round of stimulus that would change this and a few other provisions. So while this doesn't qualify at this moment, the conversation isn't over. So just kind of the best I can say to those of you who this affects is just stay tuned for now. I don't know if we have any nonprofits on here, but if you are, nonprofit organizations with fewer than 300 employees are eligible for a PPP loan. If they do not receive more than 15% of their revenue from federal lobbying activity. So if you are not a nonprofit in the realm of lobbying and you have less than 300 employees, then you will qualify for a PPP loan. If you have questions about that, you can contact our office and we can help you walk through what you'll need to get prepared for that. And then also it says more support for businesses with 10 or fewer full-time employees. This is, I don't know the nicest way to say this. This is well-intentioned, but it's fluff. I mean, the banks have done all of this. The SBA maybe encouraged them to do it, but I mean, you know, Greenfield Savings is the one that built out its portal that streamlined your debt forgiveness. The SBA didn't do that. And, you know, all of these things are happening at the bank level. So this round is going to be easier than next round or than last round because the streamlined debt forgiveness application that is coming out, because everything's been digital, because all banks are hooked up to the SBA portal now. But that was just the nature of a rollout of this plan. And they're kind of putting a little bit of window dressing on it. Maybe there's more to it than I'm not aware of, but so far, that's what this part mostly looks like. Lobbying prohibition. If you are in lobbying, you cannot use PPP loan proceeds to be used for lobbying activities. This includes, even if it's part of your business structure, to make contributions to lobbying firms or associations. So that is, it's just not a deductible expense. And if you use PPP loan proceeds to do that, it would convert into a loan. For businesses who take on a PPP loan or who are considering selling or exiting their business, a PPP loan can be transferred through an asset sale of a business. It can also be transferred through a stock sale of a business, but this does not even require SBA approval. The PPP lender may approve the change of ownership. So there is a streamlined form that the SBA is given to, or process that the SBA is given to banks, and the PPP issuing lender can allow a PPP loan and the proceeds to transfer as part of a business sale. We've helped a lot of people exiting their businesses and use this as a way to help capitalize the new buying entity, which induced them into the deal to begin with because they had enough operating capital to cover payroll for however many weeks when they first entered into the business. So for those of you who are considering an exit, this still can be a resource to you, although it would be in a way to help you facilitate an exit, not necessarily to use it for payroll. Can you apply if you've returned all of it? I mean, again, most of you have not. Any of you that have returned all or part of a previous PPP loan can reapply for the maximum amount available. So some people applied for the first round and then returned their funds because they felt that their business actually didn't need it. Those people are still qualified to reapply, assuming conditions have changed for them. Sorry, that's a redundant slide. All right, moving on. EIDL eligibility and differences from round one. So there was an additional $40 billion added to the EIDL Advance program. As I just discussed, that was the EIDL had two programs: the regular loan program, which was a loan where they issued you a debt and you agreed to repay it back over a 30-year term. The other portion was an EIDL Advance grant program where you received up to $10,000 per applicant. It was $1,000 per full-time employee, up to $10,000. This is another round of funding for that exact same program, although there are some additional edits to the program. So the same thing, up to $10,000 per applicant, $1,000 per employee, up to $10,000 maximum. You can, some first-time applicants, so if you didn't apply and receive the EIDL Advance, or you have applied and the funds ran out, you are qualified under the first round application. So you don't have to, all of the following requirements don't affect you. You just qualify under the first round of EIDL. Second time applicants need to meet the following criteria. You need to be located in a low income area and have experienced 30% reduction in revenue over any 8-week period throughout the pandemic. So leave it to the SBA and the federal government to give you totally different requirements based on revenue loss. So for the EIDL, you have to show 30%, and it's not over a quarter, it's over any 8-week period, but it has to be 8 consecutive weeks. So you can't piece together 8 individual weeks in order to show that. You have to have a consecutive 8-week period showing a 30% reduction in revenue year over the same 8-week period. You also need to be located in a low income area, which the descriptions to you, I had them up previously. Honestly, they're still a little unclear. There is an app, which I will, in a minute when I'm not sharing my screen, I'll bring up the name of it, and it allows you to look up by location whether or not you fall into a low income area. What I would tell you is this is something that will self-regulate. So if you apply, if you meet the second criteria of the 30% reduction and you apply and you are not in a low income area, you will not be approved. So you can download the app. I can't guarantee you the app's 100% accurate. I'll read you the description in a minute as to what a description of low income area defines as, but it's it's the app medium income being, I think it's either 20 or 30% less than the same median income in your closest metropolitan area, or something of that nature, to which no one knows any of that information and can qualify whether or not they exist in a low income area or not. The intentions here are very good. This money needs to be targeted to low income areas to support business development in that area. The qualifications right now are a little bit of a Rubik's Cube. There will be more clarification for this, the SBA will likely release its own map where you'll be able to search by your address. Right now, I think if you need this and you're going to apply for it, just make sure you hit the second criteria of 30% reduction and apply. And if you don't fall into a low income area, you will not be qualified. And if you do, you'll qualify for the grant and receive it. As is last time, EIDL are not, you do not apply for an EIDL advance or an EIDL loan with your bank. You apply directly with the SBA, and the link is right on their website. If you need it, I can distribute it on the Facebook page later, or I'm sure we can distribute that at some point in time. EIDL loan applications were paused about mid-December. So anyone who waited for who submitted an EIDL loan application, so not the advance, but for the actual debt, those stopped being processed about mid-December. And that was for a variety of different reasons. One is that this round of stimulus was expected to have become law really back closer to Thanksgiving. So the SBA at a certain point in time just put a pause on these applications, expecting another round to actually change the program. Now that this round is out, that we anticipate that those applications that have been pending approval for the better part of a month or maybe a little bit longer now will resume processing around month end. There is no additional funding or qualifications for this program announced now, although there is a lot of conversation about that being part of a future stimulus program. There is additional relief coming under the shuttered venue program. That'll be coming soon. That is just another name they've stuck on an additional advance for any outdoor or any venue space business. So that can be theaters, outdoor venue spaces, concert facilities, anything of that nature that falls into that qualification. You will be qualified for your own additional grant under the shuttered venue program, but the details are, as of today, are not out. Jess asked me to do this webinar back in December, and we were like, well, by that time we can't not know all the information. And lo and behold, it's January 20th, and we don't know all the information. So we'll get more clarity, and we will release it when it becomes available. I promise you, we both had really good intentions to come with all of the information, but here we are. It's good to know it's there. It's most likely going to be another $10,000 or $15,000 grant under the shuttered venue program. But again, stay tuned for that information. So now we're moving on to kind of what I'll call the rumor mill part of the conversation, which right now there's a lot of people that are close enough to the business community and the SBA community at large to know of the whispers of things to come. So I want to talk about them and at least give you, from our standpoint, what we feel is most likely. I'm not a wizard. I don't have a crystal ball. I don't know for sure. This is purely speculative. I have worked with the SBA very, very closely over the past 12 years. So I think I have a unique insight on this, but that's all it is. It's just an insight. So with that qualification, here's largely what people are hearing in the world of future relief. Biden administration promises at least one more round of stimulus, although most of that will be aimed at households and severely injured industries. So I don't know that we will see another widespread industry agnostic round of stimulus. There might be something for the airline industry. There might be something for other industry sectors, but mostly the things that are being targeted under that round of relief are going to be providing support for households and individuals and families, and some business support, but really targeted to the industries most affected by the pandemic. There are, however, discussions of offering some for debt forgiveness under the EIDL program. So if you did take a loan or you were considering taking a loan, there may be a provision for debt relief. And again, as Vince said in the opening of this, the reason that I say that there may be, and nothing's official as of yet, what I can tell you is there already is. The SBA has a program for people who can't afford to repay their debts. It's called the Offer and Compromise Program. So it already exists. It's just a really cumbersome process. It can take many months and is very, very time intensive. So what is really being discussed is if people are going to be forced to go through that process, it doesn't make sense for the SBA to put potentially millions of applicants through a really, really cumbersome process. They'll make an endless amount of work for themselves just to end up really at the same results. So there are discussions about creating a streamlined way to offer debt forgiveness without necessarily making it automatic. There'll be some sort of qualification, you'll have to prove hardship, but you won't hopefully have to go through the full Offer and Compromise program that most people that can't afford to pay their SBA debts are forced to go through. And again, the last rumor is a PPP round 3. As you saw with the industry NAICS carve out in this, what everyone expects is that you will qualify or not qualify based on what industry you are in and what your NAICS code is. So again, nothing official, but if there is another round of PPP, it will likely be for restaurants, hotels, the airline industry, travel industry, things of that nature that were the hardest hit by the pandemic, and some other areas such as transportation style businesses, service businesses, things of that nature will most likely be left out of a PPP round 3. Again, that nothing's official, so call your state representatives, call whoever will listen to you, lobby for your own best interest, but that's where the current of these conversations are headed at this point in time, at least as to our purview. And if you do enough of your online research, it's what you'll come up with as well. All right, coming to frequently asked questions. These are the 3 that we have heard most frequently since the announcement of this program. I'm sure there are others, but these are the 3 that we've heard most frequently is, will taking more PPP or EIDL money disqualify my business from receiving other funds, grants, future stimulus? It's a tough question to answer. Everyone wants to know all the information before making decisions, but not all the information is available. And so the answer is most likely not. Each grant, loan, and stimulus package has its own qualifications, and many of them are prioritizing applicants who have not received as much relief as others have, because they're in a greater need for whatever that grant or stimulus package is, mostly grants. So a lot of grants may prioritize you based on how much federal aid and other aid you've already received. That being said, I think I have yet to see a grant that specifically prohibits or disqualifies applicants based on them receiving a PPP loan, for example. And as this drags on, and when we first started this process, everyone thought, maybe we'd be on the other side of it in 8 to 12 weeks and the economy would recover and things would go on. Well, I think I did my first one of these 8 months ago. So that didn't play out. And these grants and charitable organizations are relaxing those requirements because this went from a short-term problem to a long-term problem, and I expect that things will continue to trend towards leniency and not restriction. Next question is, how does this affect self-employed people or independent contractors? Independent contractors or self-employed people are treated as small businesses the same way they were in PPP and EIDL round 1. So you may qualify for another advance. You may, if you meet those qualifications, you are considered a small business if you are an independent contractor. So as long as you meet all, there's nothing different about you from any other qualifications, so long as you meet all of the other qualifications that we just went over. And then the last one is, does getting more PPP mean I need to stop my work share program? Many of you have went to a work share program to help keep your people, as many of your people employed at one time as possible, while also leveraging some unemployment benefits for them as well. It's been, I'm sure, like walking a tightrope for management, but it's been in everybody's best interest. So does taking PPP on mean you need to stop your work share program? The answer is unfortunately a little vague, and it's not necessarily. This will depend on several factors, but the duration, one of them will be the duration of your PPP program. If you are taking well, it's between the PPP program, the number of employees you have, and whether or not you are open to repaying any portion of the PPP as a loan. So if that will affect organizations very differently. If you chose an 8-week PPP period, you are adverse to having to repay any of the PPP loan, you would likely stop your work share program. Use the PPP to fully pay people over an 8-week period, get the loan forgiven, and then restart your work share program. If you chose a 24-week PPP period, and your appetite for repayment a portion of the PPP program was maybe a little bit more than 0, then you will likely not stop your work share program. So it depends on what you want to achieve for your outcome of the use of your PPP will determine how it interplays with your work share program. I also need to put a caveat on this is that, again, I'm a transactional specialist and an SBA guy. I am not an unemployment specialist. So just the way you should have a general understanding of what I said, you should talk to a specialist who understands unemployment. And I don't know if the chamber has that resource, but I'm sure they can find it if they don't have it already. And you should verify whatever your plan is with your CPA and that resource to make sure that you are aligning, you're making the right decisions before, kind of jumping in. So guys, that's it. That was I guess that's all I had to talk to you about.